Hello. Happy Thursday, everyone. It is, come here. We have a visitor. Come here. Rip, come here. This is Rip. He joined us to say hello. He just opened the door behind me that was closed on purpose because he wanted to say hi to everyone. So hello from Rip. Oh, do you see yourself? I think he saw himself in the... Okay. Hello. I see our guest joining us, so let me let her in. Now, first Thursday of the month. You guys, it's already January 11th. That means it's halfway almost through January. Hey, guys!
Hey, what's up?
Did you see Rip? Did you see our guest? He's actually our guest today. He's taking your place.
That's fine. Okay, well, have a great night. He's so cute.
Thank you. I do. He is so cute. He has my heart for sure.
Oh.
So I was just doing the intro, and we are here on our mini masterclass. And today this whole month we're focusing on compliance for our customers, right? So we're talking all the things to make sure that your small business is compliant. One of those things, and a big, huge thing, is receipts.
Oh.
And so we're going to be talking about receipts today with you, and you are the designated motivator, all caps, the one and only. And I know we've had you on before, but why don't you tell our audience a little more about you, or about you again?
Sure. Yeah, no, my name's Dawn Brolin. I'm the CEO of Powerful Accounting out of Windham, Connecticut. We work with various business clients on an ongoing basis, helping with tax planning and business planning and projections. We also do a lot of tax representation work. So we handle a lot of audits. We handle all kinds of things where people get themselves into trouble, or maybe they didn't get themselves into trouble. They just got randomly picked by the IRS to have, an audit. So we do a lot of that work, and that can be very stressful for business owners. So I love that you're educating your people on how they should be handling things like receipts. And I've got great horror stories,
Yes.
and I have some success stories, and I have all kinds of solutions and things to think about.
Wonderful. So yes, horror stories. I've had only a handful of audits in my 10 years, thank goodness, for my clients. But in every single one, receipts was an issue because they could not produce the information the IRS requested from them to prove that it was a legitimate business expense.
Yep.
And therefore, they were, subject to the back taxes and interest and penalties and all of that for the taxes that were reassessed if these weren't allowed. And so I'd love for you to share. I think sometimes when your accounting professional says, "Where's the receipt for this?" people just hear wah, wah, wah. And, it's a big pain in their rear. And it's like, I don't know where I put it. I'll get to it later. It's not that important. I'll have it in a shoebox when I need it. And then your house got flooded, or you moved 3 times since that year, and you don't know where it's at, or the dog ate it, or the baby pooped on it, or whatever the excuses are, I've heard them all. Yeah. And the bottom line, the burden of proof is on the customer, on the client who owns the business at the end of the day. So I'd love for you to share some of the ways you've seen receipts be an issue for people when they did get audited.
Yeah, I have an audit right now. A fellow out of New Jersey, and tomorrow is the final day to submit any and all receipts that he has, and the auditor chose a sample of January, June, and December. So I sent him a P&L detail and said, for 19 and 20, those are the 2 years he's being audited for. And I said, here's what you got to produce for receipts. This is what's in your general ledger. So go get them there, shooter, make it happen. And so, receipts as a great conversation. There's a couple of different ways people think about receipts. Yes, it's a pain in the neck. I'm a business owner too. You're a business owner too. Yep. We know it is not convenient to have to do that. But guess what? If you're in business, you're a business owner, you're not an employee, there are responsibilities that come along with that. Yeah. And one of them is keeping receipts. Now, there is something called the Cohan rule, which is, if we've got an electrician client, and the electrician client, obviously needs electrical supplies. They need wires, and they need nuts and bolts and whatever else electricians need. so they have to be reasonable and say, well, if they don't have the receipts, we know they're buying, those are supply houses, they're buying electrical receipt, like, so they're buying electrical stuff, Home Depot, those kind of, so they have to be reasonable. But there are places where they don't have to be reasonable, meaning, well, they don't have, they have to be reasonable. But I guess what I would say is, I don't want them to have to be reasonable. I want them to take 100% of the expenses that I paid for.
Yeah.
And in order to do that, you got to have your receipts. Now, the lovely part about, one of the things about the IRS and the way they look at things in the Internal Revenue Manual and all the guidelines about what you have to do as a business owner to keep track of your receipts. This is what they say. Historically, they would say you have to have the physical receipt. But they say in there, they've got language that says, well, it's going to be for anything that it has to be something that in the time in which you're operating. So what means 20 years ago, we didn't really have scanners. We really didn't have the technology to capture receipts in a way that would be a lot easier than putting them in boxes. Because you think about remember the thermal receipts? They still have thermal receipts, don't get me wrong, but those fade over time.
Yeah.
You'll pull out a box 5 years ago, there's nothing on that thing, it's blank.
Right, it's black.
Gone.
Yeah. Yeah.
So because, and I think this is where the IRS is going to get really tight on receipts, because we have no excuse. For instance, you and I, we both use the same app called Dext.
Yes.
It is, and this is, it's not hard to do it. So here's how I approach my client who I wanted them to implement the tool. And he was another electrician. I guess I really like to work with electricians. So he says, Dawn, you know, I'm an electrician. I know electricity, but I'm not really good at technology. I go, okay, that makes sense. I understand. You know, you're just out there. You're a dude running an electrical company and you don't know technology. All right. I can agree with that. So I'll tell you, you know what? Okay. Then we start talking about something else and I go, oh, wait a minute. He was actually in my office a week ago. We still laugh about this story. And I'm like, how, isn't your baby isn't she like 6 months old now? And he's like, yeah, she's 6. Oh, show me a picture of her. Pulls out, shows me a picture. And I go, so you can take it. You are, dude, no excuses, no way. And we laugh about that. So being able to have an app on your phone, I mean, obviously you could make a folder on your phone called receipt, and you could take a picture and have it go into that folder every day. The thing is, it's not important to you until it's important to you. And you know when it's important to you? When you get the letter. And the letter comes and you want to throw up.
And it's an emergency now.
It's immediately an emergency.
Yes.
And so this guy, for instance, who I talked to again today, is like, I'm trying to find everything, Dawn. I couldn't get anything from this supply house because their records are so old or their computer system changed. So now he's dependent upon the vendor to be able to supply him with the receipts.
Right.
So it's a really big problem. And here's something I want people to really listen to me. The IRS just gave out a ton of money. And do you know what they're doing now? They are in a big way. And they just hired, and everybody talked about when they hired all these people.
85,000, I think.
85,000. Now I can tell you, I probably talked to one of them today on the IRS, on the telephone. She had no clue what she was talking about. So I knew she was but what's happening is they're pushing people up. So now there's more agents to audit because they've got to get their money back. They gave away PPP loans. They loaned EIDL loans. Still, they don't have the money. It's good. They got 30 years to pay that off. That's still not them getting money back.
Right.
They did the ERC credit. There's 3 things. Now they've done a 4th one, which I can't believe they've done. The 4th one that they've now implemented is a refund of any penalties and interest on late payments in 2020 and 2021. So now they're giving more money back, and that's not going to be taxable or anything like that. It's just they're going to be giving refunds. I got 6 notices the other day for clients that were getting it. I see Emma Mackey's on this Instagram. I hope she learned something while she's on here because I know her. So she's probably cracking up. So anyway, just think thinking about that, like that's what people are not considering. They're not taking into consideration why would the IRS be, hey queen, hey,
Hey.
hey, why would they be not stepping up enforcement? They don't have, billions of dollars are gone.
Yeah.
So you know what, they're going to be stricter on receipts, and now more than ever. And you can talk to Eric Green, Sam. You know Eric Green.
Yeah.
He's that tax attorney. He's amazing. They are stepping. Emma Mackey, the only person I choose, so sweet. So the only reason why we are all freaking out as practitioners and tax attorneys is that notices are going to come like crazy, and taxpayers are going to be freaking out. So if you haven't done this in the past, my big advice is start now. You got now. Keep your receipts. Use debt.
Keep your receipts. And listen to your accounting professional if you're working with one, because hopefully you are. And when they say they need it, it's actually to cover your butt. It's not because they just like love handling receipts or you know, looking at them all day long. And so it really helps them do their job better so that when you do get audited, you're covered. Because an audit should be as simple as let's print the PDF of all the receipts that we've put and hand it over and let them do their job. And then they say, thanks for following the rules, and you move on with your life, right?
Well, and that's a good point, Sam, because when an IRS auditor comes in, they send you their what's called an IDR, information document request. They send that to you and they say, this is what we want. This is what we're looking for. And you can take a flash drive, plug it into a computer, drag and drop everything that they've asked for, and you hand it over to them. They're going to be looking the amount of detail they're going to look at is much less than someone who's like piecemealing. Oh, here's these bank statements. Let me look for the credit card statements. Let me look over here. Let me look over there. You know, I've had audits where we were able to do that. Drag, drop, done. 6 months, the audit was over. No change. Everything's cool.
Right.
We're happy. We got receipts. We got this. We got that. We're good. The last thing you want is an drag out. Right?
Right.
Penalties, you're 100% on anything that they disallow. You are going to pay a minimum of a 20% accuracy penalty. That's just an accuracy penalty. If they find you to be negligent, you're looking at 75%. Like the amount of money you're going to be, I think it's 70. Don't quote me on 75, but it's high. But I can tell you that the key to it is we understand it's a pain. I had another client we worked with on it. They're working in Dex now, and they're like, you know what? I actually really like this because we can't get copies of our gas receipts. And I'm like, well, why is that? They go, because the thermal receipts at the pump are never refilled. They're always empty. So if you want a receipt, you have to go inside and get it from and this is one HVAC company. They're like, we're not going into the gas station.
Yeah.
We're not doing it. I tell them, take a picture of the pump. It'll match the receipt on the credit card.
Right.
It'll match the credit card.
Then it's an actual gas pump, and you can see that it's the gas station. You know, another thing Dext does that's pretty cool is they do have direct connect to a lot of the vendor online sites and utility sites. So you can connect where as soon as your statement's available, it's indexed and that goes into QuickBooks and you can reconcile and it's all there. You don't have to sort through emails and all the things. So there's a lot of things you can do with these technologies. QuickBooks Online has improved their receipt capture system significantly in the last, I would say, even year. A lot of people are coming off of Dext now and going straight to QuickBooks Online because they're able to do all the things they weren't able to do before now. Hello, Mike. Thanks for joining. I'm sorry, just got to do a little shout out. So anyways, there's lots of things that we can do. I'd love for you to share a good story of when people actually did that. They kept their receipts. They went in and did their things like they were supposed to. They listened to Dawn and Sam. How did that help them?
Yeah. So, well, I'll give you a really good example. Has somebody who has a rent, they basically pay themselves rent for their home, for home office, for instance, right?
Yep.
So they've got to keep track of like the electric bill. They're not necessarily, so they're personal expenses.
Right.
Okay. This is a really successful one, right? Oh, Camden also is here. So funny. Anyway, so what it was, they used Dext to connect to their electric company, to their gas and oil company, because in Connecticut we have home office gas. Like people out west or like California are like, what's home oil? What do you mean by that? I'm like, yeah, that's what we do in the Northeast. So it's our thing, oil. And so they connected to that. They connected to they get a receipt for their homeowner's insurance. They forward it to Dext. There's not really a lot necessary. So they're able to use Dext sort of as an accounting solution in that all the receipts that come in are for that home office. So they were able to use that. So when they had to pull a report, they could pull a report. They had everything they needed. They had all the backup for their home office expenses to offset that income. It's a huge tool. But we've had people where well, one of the other solutions I just want to say for people that are, and again, I know some people can use QBO. The only thing with QBO is if you have employees that you need receipts from, they're not going into QBO to take a picture of the receipt and attach it. So that can be a little bit cumbersome. If you're a sole prop, that's a little bit easier to do it that way. But from Dext, with the employee perspective, they're able to be utilizing it that way. But so we're just finding that having people utilizing Dext with either forwarding receipts to Dext, we as the bookkeeping company, you as the bookkeeping company, whoever the bookkeeper is able to see those receipts. And guess what you're going to do? Ask less questions. So if your accountant is sending you, ask the accountant or ask the client question list in Excel or however they're getting it to, right? And there's Kate's now joining. So if they're doing that, then we're not having to ask as many questions, setting up the rules where we can say, let's Staples, it's office supplies. Hello, let's go type of thing. Yes, the triplets are here. And so those things, that success alone, our clients are like, I'm so excited that I don't have to hear from you as much about asking the questions about the different transactions. So that's been a huge win for us from the accounting side of it.
Yeah, we have a contractor customer, and they want, like, they're a non-negotiable for them is that every guy who has a card in the field has to give their receipts. And so I was just on the call with them on Tuesday, and I was like, good news and bad news. I mean, good news is you have 90% of your receipts. Bad news is you're missing 900 receipts for the year, because I'm able to go in and see how many transactions don't have receipts that are supposed to have receipts. And they were just like, oh my God, that's so much that we're not capturing. That's so much that we're not getting, or that it's not being verified. So it was a good thing for them to hear. And so now they can really crack down on their SOPs, and they can, change up how they're doing things. But it's on them, not on their employee who's charging all that money when they get audited.
Well, and
so it's a big
it's
deal.
a big deal. And what about cash?
Yeah, right. Cash, pulling out cash.
So,
yeah.
How are you're going to bring them back and then you're going to add them up? You're going to add them up? Like, who does that?
And then
so if you're
deposit the 2 cents that is left over so that you balance. No, I don't think so.
Doing no cash boxes or taking receipts. As a matter of fact, we had a client who was, we moved them to Corpay and we had them get the credit cards for the employees because they were letting the employees manage the cash box. And I'm like, that's just you're setting yourself up for failure there. Why are you doing that? So it was at the end of the day, for business owners who are out there and they're paying cash for a coffee, even a coffee, I'm like, listen, if you're in the 33% tax, or let's say you're in the 28% tax bracket, for every $100 of cash that you are spending, you're paying $28. You could be saving that $28 by capturing the. What are you doing?
Because at the end of the day, if you can't prove what it is, it's supposed to become an owner's draw or distribution, correct?
Correct.
Right.
Yep.
Yeah. So I wanted people to hear this from a tax person's perspective, because like I said, a lot of times when we are working with clients, they just kind of hear, do you know that baby Instagram reel that's going around right now where he's like, ah, blah, 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 blah. That's what they hear.
But that's probably.
I'll send it to you later. I'll send it to you later because that's what they hear. But also, so our big compliance topic for January, receipt capture, it's so easy now to work with your accounting professional, to put it in a software, to take a picture. You don't have to do a lot of the old scan, upload, rename, drag and drop. None of that has to happen anymore. So I want people to know that. I want them to know, like you said, you can start now if you haven't done it before. It's never too late to start, and this is perfect time. It's New Year, January. Get your books off to the right way, right from the beginning of the year. So if you have any other words of wisdom, great. If not, I want you to tell them how they can get a hold of you if they need an amazing tax preparer, or if they're looking for some IRS help or tax planning or any of the services that you provide.
Yeah. So two of the triplets that are actually on the Instagram today, they were involved in a really large case that we did. This was back in, I think, 2017, if I'm right, or 19, back then, whatever. And this guy sent us 20 boxes of stuff, statements, receipts, and I made the two of them organize them because they had to be organized. We didn't know what was in there, what wasn't in there.
Right.
And they literally would just have receipts in there, just piles of receipts. And I can tell you that person paid a lot of money for us to do that. So for you to simply take your app out and snap a picture of a receipt is going to save you thousands of dollars in the event of an audit.
Right.
And so what I used to tell people, you're probably more likely to get bit by a shark in your parking lot than you are to get audited. But I don't say that anymore. I now say, you want to be prepared in the event of an audit. That would be, for me, don't make an assumption that, oh, not everybody, no, I've never even heard of anyone getting audited, because it just takes that one time. Okay, that's my.
And in the few audits that I've been a part of, only 2 of them had a trigger. The other ones were all just random.
And it's going to get worse. They're going to increase the level of audits, and they're going to crack down. You're going to suffer from it. So get it together. You're at the beginning of 2024. There's no reason to start now. No reason not to start now. Get started. Get in touch with Sam. If you need a bookkeeper, let's just say that, get in touch with Sam. She's the one who's going to take care of your stuff. We're sending clients to Sam all the time because she knows what she's doing. She's got her crap together. Let's just say that. If you need help with prep, need help with IRS resolution, you have collection. If you're in collections, they're coming down hard on collections. They're just going to start leaning the crap out of people, taking the money right out of your bank account. That's going to happen. If you're not in a payment plan or you're having issues, you've got to do something about it. For us, typically I tell people, because I have to keep myself out of the middle of it as I make a mess of it. Sam knows that. I have people call. Yeah, it's bad. So Tracy just picks the ball up and runs with it. So you can either email Tracy at Tracy, Tracey, at powerfulaccounting.com. Powerful has 1 L. I'm not a good speller, so I just tell people that. So it's Tracy at powerfulaccounting.com, or you can just give her a call, 860-359-9185, and chat with her. And we give out quotes, and we want to work with people who want to have their books together. We don't want to work with shoebox people. We're not interested. We don't want powerful accounting. We don't want to clean up your mess. We want business owners. We want to work with business owners who want to grow their business, want to understand their tax liabilities, want them to understand, do tax planning, and are willing to pay for it. And that's really because we want to build a relationship with the clients we serve and that we work with. We want to minimize your tax burden. In order to do that, it takes time to come up with all those strategies and do that. Right. And that we want to work with serious business owners that want to grow and want to be in compliance and want to do things the right way. That's the people we're looking for. Yes, Cam and Kate, she definitely, those 2 girls, they sorted receipts. I can't tell you how many hours, and they did a great job. Yeah. But we need to use the technology now. Right.
Oh, I love it. I'll also put that information in the comments, so when people are rewatching this, they can snag it. So thank you so much, Dawn, for joining us again, and have a wonderful rest of your evening. And everyone watching, thank you for coming, and we'll see you in 2 weeks for the next one.
Love you, girl.
Bye. Stay out of trouble, right? All right. See you. Thank you.
You bet.
Bye.